Welcome back, everyone, to another episode of the Cashflow Chronicles podcast. We appreciate you tuning in today. This is your first time checking out the podcast and you have yet to see our full infinite banking overview. Please head on over to the website, legacylifeandretirement.com. Right there, front page, you'll be able to watch that. That'll give you some good information so you have a little bit better understanding of what we're going to be talking about today. I'll also link that at the end of the episode in the show notes if you're listening. And if you're watching on YouTube, I'll go ahead and pin it here somewhere, make it easy for you to find. So today I am joined by my good friend as well as my mentor, one of my mentors in the space of infinite banking, Mr. Jeremiah Dew, aka JDew. He makes up one half of the Banking Bros who host their own podcast. I highly suggest you go and check that out, called The Cash Compound, which can be found essentially on all major platforms. Definitely give that a listen. It's where I got a lot of my information from when I was coming into the space looking to grow my knowledge. But I want you guys to understand that this dude is a legitimate pro in the space. You'll obviously understand that by the way that he speaks, the way that he carries himself, but he is a certified practitioner, went through the Nelson Nash Institute. So all the accredited little things that you need to really be an infinite banking coach and teacher, he has. Him and his brother have also spoken to thousands of people and helped countless of them get started with their own infinite banking policies and on their journey. So he knows all about that. So I'm grateful to have you here, man. Happy to have you share your story and really, just start educating the normal people like yourself and me on how we can take back control of the banking function in our lives. So welcome to the show, Brent.
Let's go. All right, ladies and gentlemen, happy to be here with Mr. Shawn King, Legacy Life. Oh man, before we get retired, we're going to get some Legacy Life in the building. We'll retire a little bit later. So happy to be here, man, my friend, and very excited about this conversation.
Definitely, man. Super happy to have you. So I think you and your brother, I think one of the reasons why we're sitting here is because of what you guys have built and the attraction that you're putting out into the universe really drew me in when I was looking to really break away from just the typical life insurance side of the business and, the term, the final expense, that kind of stuff that most people think about when they think about life insurance and gear it more towards the life portion of the life insurance. And I think what you guys were doing with the cash compound really appealed to me. You and your brother doing it together, a real family style business, and the way that you were, you know, just educating people out there on the space, the information you were putting out on social media. So kind of give me a little bit of background on how the cash compound came to be, a little bit about you and your brother's story. I'm going to have a separate episode where I have Jonah on to get his side of the story because I'm sure it's a little bit different than yours is. He probably did more, you probably did less, whatever it may be. But give us the rundown on the cash compound, man.
Man, first off, let me just encourage everybody here to make sure you understand that whatever I say is actually the true story. John's going to make, okay. So yeah, so I'm older than he is, but he is one of my two brothers. And, for about 10 years now, we have been doing and practicing the infinite banking concept. That means, just like Shawn, for all of you who are new to us, or maybe this happens to be your first episode, we all do this process that we teach and preach about. So 10 years almost of doing it, about 7 years of helping people, a little over 7, that we've been helping other people get started with code cracking cash flow. That's what the cash compound is all about. We got taught a system, not by our parents, not by conventional education. We got taught a system 10 years ago, but we're first exposed to a system that we did not understand at all, didn't make sense to us the first time we heard about it. And we learned that to be the infinite banking concept. So that's what we're doing around here. And we realized that if this process was guaranteed, always true, growing and cash flowing, income tax free, like I'm always saying, then we needed to be doing it and helping other people. Over the course of time, we realized our friends and family never were taught this either. I mean, how did I make it to 32 years old without ever hearing about this? And so we made it our mission around here to break those cycles of financial failure and those shackles that are holding people back, the risk that they're taking to giving up control of their money and things like that. So we've been doing that now through education, through content on social media, through libraries of courses, through on-stage presentations and one-on-one Zoom calls and family financial forums just like this, man. So that's kind of how we got started and why we got started.
Definitely, man. Grassroots, taking it from, the bottom up. So what was it about, where you were at in your life and seeing this concept that made it make sense to you? Because I know some people, when they read this book, this little black book here, Becoming Your Own Banker by R. Nelson Nash, when they read it, it doesn't always click with them. There's some things that they're like, okay, this makes sense or this makes sense, but I don't really get what he's talking about. What made it click for you guys? What was that deciding thing where you're like, "Oh, man, I might not get it right away, but I get it. I get it enough to know that we need to be doing this."
First off, you're exactly right, because a lot of what was in that book when I first read it, late 2015, did not click with me. I did not understand. It went straight over my head, like you said. When we're talking about banking and financing on a personal level, I was a cash buyer and I did not know what those things meant.
Mhm.
I did not understand what that was at all. The reason that it clicked for me really was coaching over time. It was coaching over time in videos. What now it can be done through educational videos and things like that and stuff we've created. And secondly, the reason I stuck with it or got started or thought that something was there was because of the credibility of the people who shared it with me. So what actually happened was we were involved, my brother and I, in a network marketing community in 2015, where some of our upline, our mentors, people that we knew, liked, and they trusted us, said, I need you to go figure this out. We started it. I got told by a guy who lives in South Carolina, where we live, northwest corner, in the upstate, we call it, in Greenville. Hey, man, I got started with these life insurance, I don't know, fractional banking, something like that. So I need you to go figure out what's going on. I think our big guys, the Blue Star Diamonds up there, or whatever they were called, they're up there making 40% on their money. I mean, as bogus and crazy as that sounds, that's what I was told. It was that bet. That was two sentences that I was given, but I was tasked with figuring it out from people that I trusted. That's really how it started for me. So I read this book, didn't understand it, went straight to YouTube. I'm clicking through Investopedia, YouTube videos, trying to figure out like what bold print, like high school, what bold print in this book am I supposed to go figure? I don't even know. I need definitions for the definitions. You know what I'm saying? It was like taking a science exam in high school for me. So that's kind of how it started for us. But the coaching and what we give now, right? The one-on-one, the free consultations, those things really help, because if you have an idea of what you want, we can explain how the foundational tools that we're talking through in infinite banking will get you there. So that's kind of how it all started for us 10 years ago, man.
Yeah, and can you explain to people, I talk about this all the time, but I think it gets lost a little bit that infinite banking is a concept, and it says it right here on the front of the book, "Unlock the infinite banking concept." I think people often misinterpret this as a product or, something very specific that they're buying. Infinite banking as a whole is a concept. It can be used in many different, avenues. It just happens that a participating whole life chassis is the best vehicle
Right.
to be tied to. But can you talk a little bit about the concept of infinite banking that I think people they're missing that portion,
Yeah.
the idea of it.
That's a great point, man. Like I said earlier, you're hitting on all cylinders. Infinite banking concept is about a culture of control of your cash flow. I've said that phrase once or twice before. It's a culture of control of your cash flow. If you think infinite banking concept is a type of life insurance policy, you're going to miss it.
Mhm.
Hopefully, we can help you out with that product and help you understand what is the best chassis to be able to do this process with. But the process is important. That's where the concept comes in. What we're doing is we're controlling our cash flow in a way that the average American, and by average, I mean 99 percentile of the average American, doesn't control their cash flow and they don't realize it. So the reason people get confused is they don't know what the problem is. If you're doing all of your financing through a third party bank, and it doesn't matter which bank, it's the same kind of idea. It doesn't matter which bank. But if you are paying cash or you are utilizing third party banks for your financing, you're buying houses through borrowing, you're financing cars through the lenders, you are putting stuff on credit cards, you are losing money to the third party who's getting your interest. And if people knew that, if they understood that, or sometimes if they get us down rabbit holes while we're teaching and we bring them back to that, we're going to help them. That's when you're going to discover what infinite banking concept is all about. By utilizing these 200-year-old contracts that always work, that always go up, that are income tax free, that have cash and liquid leverageable equity from, you're going to solve the problem of how much money leaks away every time you do a deal, whatever that deal is. It might be groceries, it might be debt, it might be a house, but there's money leaking away. Nelson talks about that in the book with the all-American man who's paying 34
Mm-hmm.
of his
34.5 cents of my
income
money.
to third parties. He's losing the interest. And most people, they don't get it because the internet can microwave things for you and you go straight to different types of life insurance. And so you might miss it if you just think it has to do with a life insurance policy only. You can do infinite banking with life insurance, but if you miss the concept, you're in trouble.
Yeah, and I think he mentions in the book something that you just brought up, losing out on 34.5 cents out of every dollar. The fact that people are focused on the wrong things. It's, can I go get 10 or 12% out in the market? And what you're not realizing is, dude, we could double down over here by just recapturing a portion of that money that's leaving your family, your banking system. And if we can do that, then if you go and get 10 to 12%, fantastic. But if you don't, you know that you've recaptured a large portion of money that you can then put to work for you. I think that's something that so many people miss, along with the, I know we chatted about this multiple times, but the idea of borrowing your own money. Why would I need to pay for my own money? I think there's a big uh, misconception in how the money that you're utilizing in infinite banking act.
You're exactly right on that front too, of course. I've been on podcasts before with folks who say things like, "Oh, I've run the numbers and, the returns are not so great, but, it might be a good idea." They missed it right there. They missed it. And then I've said that and I've challenged a few folks that have had me as a guest and I've enjoyed talking to them, but I'm like, ugh, you missed it. Like, I don't know it's kind of like you go on Dateline or Larry King. It's like, you want to have a cordial conversation. They've opened it up the opportunity for you to talk to their audience, but like, yeah, you just missed it by what you said. So I don't know how to, okay. So I'll be nice, but maybe I'll just stay away from the topics you don't quite get yet. And then secondly,
Paying
borrowing
for
your own
my own
money.
money.
So that the misconception there, of course, is that when you give an insurance company money, Jacob State Farm or Flow It Pro, right? I'm always talking about them. And if you give them money, it's called premium.
Hmm.
Premium at the life insurance store or at the regular insurance store buys you their money. That's the reason we went to the insurance store. Because if we give Apple or Assurian money, we buy their money. It's a bunch of paperwork and a peace of mind and a promise. We can sleep at night now. We've got a bunch of their money on standby when there's a loss that we need to replace. If it's a car or a phone or your life. The life insurance store premiums buy you their money death benefit. We're going to borrow their money. The death benefit is 10, 20, 100 times more than you gave them. We're going to borrow that big pool of money, and our money is still getting us guarantees. People think our money is gone. It has disappeared, and that's really not how it works. And that's why at the Cash Compound, the banking bros are always going to show you this 3-cup setup. The 3-cup setup helps you remember that your money is still in cup number 1. When you give them money, it has guarantees on it. Can't go down or backward. It's guaranteed to turn into a big death benefit, and it's going to cash flow more equity or cash value all the time. If you ever call them, you can get it liquid. And because of that, that separate pool of money that we're borrowing isn't yours. We're borrowing their money. Now, their money has a cost to it. It's called interest. And while our money grows with compounding interest, uninterrupted, constant compounding, we borrow against amortized interest, we win every time. And if someone is willing to stomach that 30 minutes or 30 days or 30 years of understanding it, they win because it's guaranteed to work. So we just have to keep people around long enough to be intrigued about the idea. That's why we call it the save and spend system. We've dumbed it down. So we try to take math out of it.
Hmm.
Beginning. Day one, it's not about math. So the day one people who ask me math questions, the day one people who have me on their podcast and ask math questions, I'm trying to make sure they understand. If we take the math out, do you know that our dollar buys their 100 and we can leverage it and borrow it? Income tax free and it always goes up. If we can do that together, we'll do any math you want. If we want to start with math, you probably missed the concept.
Definitely. And I think it's another reason that it's kind of hard to understand is people are comparing it to all of these other things. What other vehicle out there can you save and spend the money with? Like, it's a hard concept to wrap your head around because if I spend this dollar, that dollar's gone. In any other place in the world, in any other vehicle, I can't take a dollar, spend it, and still have it working for me in the background.
Right.
So for you to tell me, oh, you can save your money and it's going to continue to grow for you. And you can also leverage it and spend it. I'm like, no, you can't.
Right.
How can you do that, bro?
Yeah, immediately you're like, no, you can't. So yeah, that's why we start with that, and it's a concept that we were so smart and finance bros and the way we grew up to be able to understand. It took us 4 years of doing this and helping people to come up with that 3-cup setup
Hmm.
and that idea. And the idea it's not a fable. It's not something that is ethereal. You can't grasp. It was just a visual of it. People think that they're borrowing their money, but we bought a bunch of money that we're borrowing against. Our money is still there. And that's helping people left and right. And that's why we say it like that. We're going to save and spend money at the same time because we're going to save our money and we're going to get a bunch of their money to spend. And it's just going to keep going up all the time. So when people see that, they go, oh, and what's beautiful about us and the way we help people, and now that you've become a part of our system and teaching people this, is their questions get a lot better.
Hmm.
What? Gee, their questions get better. And they go, oh, well, I thought, and I go, hold on, before you tell me what you thought, even though I'm gonna let you finish, as Kanye said, does it matter what you thought now that you know the truth? And the answer to that is, of course, 50-50. One is, oh, yeah, well, it doesn't matter anymore because I thought wrong. I thought incorrectly. And I go, okay. And then secondly, it was like, well, it does help to let people know and let them talk to you about where they came from. I go, yeah, you can tell us where you came. But now you realize that we're buying their money and leveraging it, and our money's still going to grow. That just cleared up half of your goofy questions because you're like, whoa, this is different than I thought. Yeah. Well, Nelson Nash said it best. It's all in the way you think. So we created a visual and a system so we could get people thinking a little bit more clear before they ask us 101 questions that are like not relevant. They're like, that's not relevant because it's not really right.
I wonder what your guys' trajectory would have been without the 3-cup setup and people being able to visually see that. Because again, while you're reading the book and understanding the concept of being the banker, that's kind of what's missed. I think, the illustrations of actually he's got the number illustrations and everything in there, which are great and they're neither here nor there, but actually seeing the movement of the money, I think helps in such a dramatic way. Uh, Again, I think what you guys have been able to create after trial and error of getting same question. Hey, I'm not getting this. Hey, I'm confused at where this is going to just be like, hey, here's 3 cups. We could break this down for you in such a simple manner. that you could bring your 5-year-old over here and he's going to be like, okay, I get it. Where the money's going with the cups and everything. That makes sense. So, I mean, again, bravo to you
Well,
guys for
hey, it
figuring it
was
out.
once again, man, as many people would say out there, two things. One, it came from frustration. It
Mhm.
came from frustration because we were trying to help people understand. And well, like I said, we were several years into it before we actually codified the idea. 3 cups, save yours, spend theirs. And secondly, I got to give credit to my brother. You know, for years, he was helping people with what you might call policy services, with what we call the maps and walking people through how to use their policy, maybe for debt payoff or debt recapture. This is how you can pay off your debt and still have the money. And he, out of frustration, one day said, we've got to tell people that, you know, this money is not theirs, they're borrowing. They think they're withdrawing their own money. And some people who are listening to this broadcast that we're doing right now just got it because that's the first time I've used the word withdraw. That's what we're saying is not happening. You're not withdrawing your money that you put in. You give them money and they give you a separate pool. So we have a separate pool that we take. We borrowed it because it wasn't ours. You can withdraw yours, you can borrow theirs.
Mhm.
And once we said that, and he said, I got to help them understand that, man, it's just in a different bucket. Like they think it's their bucket and they're taking it out and it's a withdrawal and it's in a different bucket. And I said, oh, well, that's what we'll show them, a different bucket. And that's the beginning of what became the 3 cup setup. It was buckets at first, but you know, I grew up Baptist, man, so it had to end up rhyming. So
Yep.
three setup, you know, it was
Yep.
become cups. Just be, you know, the word that rhymes with bucket is not family friendly, so we didn't use that.
The F word? Fine.
Bucket and then
Yeah.
the right. We could, yeah. There you go. So
So if
yeah.
you guys haven't seen, again, if you haven't tuned into the Cash Compound YouTube channel and everything, they've got videos and all this stuff. A lot of this content that I make, again, I don't come up with anything myself. These are all just ideas that I've borrowed from other very successful people in the space because the message is always the same. No one's reinventing the wheel around here. And speaking of reinventing the wheel, why do you think, because this is a whole life insurance, which again is all this is. They added the PUA rider, which allows us to do a little bit more of the banking a little faster. And you can tell people when exactly they kind of brought that about. But the concept of whole life insurance has been around for a very long time. Call 200 plus years that this has been around. What do you think the reason is? Because very successful people have been using this. And kind of talked to Jason, our buddy, about this, and he's like, "Oh, let's put on our little tinfoil hats." But what do you think the reason is that people have kind of been hush hush about the ability to use this type of vehicle, this very sturdy, long standing, this well oiled machine that you kind of just know what it's going to do, but they're not teaching anybody about it. Why do you think that is? Where's that miscommunication, that lack of knowledge as far as whoever's giving us information about how we should control our finances to the information that we should actually be receiving to control our finances?
Hey, man, we got to end the Fed. I'm going to say it right here. Put the tinfoil hat on. The government shifted the conversation from third party guaranteed avenues, insurance companies. I just blew one or two people's mind who are listening to this podcast. Life insurance is not a government sponsored event. It's not a government controlled event. They did not come up with it. Some people need to chew on that for a while.
Mhm.
What we're utilizing here is contractual statements between third parties of the government. It has nothing to do with the government. And once 1913 came around, the income tax came around, people started over the course of the booming 20th century, started utilizing the market and Wall Street and those types of vehicles. They lost sight of what was happening guaranteed third parties elsewhere. Also, because the government is influencing us to put money in tax deferred things like your qualified plans that they created over the course of the 20th century Everybody assumed, and that's what they talked about at work, and that's what was working for most of the 20th century, and I'll give them that. They lost they started to distrust the idea of anything outside of the government.
Mhm.
People, I think probably in 2024, as we record this, we're a week away from having a new presidential election hit us, right? Everybody's in the polls, in the lines right now. And so many people have a confidence in the government that it's said really well like this: the more you trust the government, the less you understand history. Like,
Mhm.
these tools and these systems that they brought about are things that your great great grandparents never would have done, never would have thought about, never liked. The idea of income taxes came around permanently in the when the Fed came around, 1913. They started pulling it out of your check in the 30s. Before that, you had to figure it out. It was like you were a contractor still and you had to pay. In the 30s, they started taking them out of paychecks. Before that, you got to realize most people were agrarian and they probably weren't making a lot of money. They could grow vegetables in the backyard. But your great great grandparents did not trust the government, did not think this was a good idea. And now you got on Twitter telling me that I'm evil because a $36 trillion in debt system. I don't give them more money to waste.
Now they're doing good with it, man. We're
Yeah. So
wait, we're
anyway,
about to turn the corner. We're about to
right, we're about to turn the corner. I like that. So anyway, there's a lot of reasons for that. Also, there's a huge misconception about how people get paid, to tell you about this. And, meanwhile, your brokerage accounts and those managers and those money managers get paid way more, but they've conned you into thinking that getting paid a commission upfront for a sale, which you get in everything else you do,
Mhm.
is somehow in life insurance is way worse than them getting a pool of everything that you get 1%, 2% for the rest of your life. Even if it goes down, they'll still get paid. So anyway, people are just lost on that type of thing. And there's a lot of loudmouths out there who have great other advice that are super wrong about what's going on here. We're not talking about anything but the banking function. If you control the banking function in your life, which most people who just heard me say that or just learning about it don't understand what that means. But if you control the banking function of your life, you're going to win. If you can do that through a guaranteed product that is not going to be taxed, if you utilize it as a loan instrument, as it grows, you're going to win every time. And it has nothing to do with investment. I just blew more people's mind for you, Shawn. I didn't say anything about investment until I
Not
said that
investing.
we're not investing anything. We just bought insurance. That literally isn't that the antithesis word? It's the opposite word of an investment. Investment implies risk and
Yes.
waiting. And the riskier the investment doesn't mean the more it makes. The riskier the investment means the more likely it is to lose. That's what risk means. Risk means the more likely it is to lose. If you stand on the top of a building and you're walking along the edge of the building, that's risky. It doesn't mean you're going to gain anything. It means you might fall off the building. That's what risk means. So people lose sight of that with money. They also don't know how to do money math. They don't know how to do time value of money. They lose the track. They lose the facts that, hey, if you put money somewhere, you can't use it, like a qualified plan, maybe until you're of age, you can't spend it. If you cannot spend it, what good is it doing you?
The qualified plan thing, it literally blows my mind because I have a podcast, I have a YouTube video about like doing a side by side comparison, going into work and at your job, they offer you 2 plans. They cover the names of both plans. They give you the positives or the benefits of plan A,
Yep.
which is unknowingly to you a participating whole life insurance policy, and plan B is your work qualified plan, your 401k. And you list those benefits out or just the things that they do, the access, the good, the bad. No one in their right mind would say, you know what, plan B, that qualified plan, that looks like the plan I want. I want to lock my money up. I want, like, again, we could go through a laundry list of things that plan A does, that plan B doesn't. So the fact that they're feeding everyone this plan B option as this is what it's going to be to get you to retirement, this is what everybody does. Just look around. Who is it working for? It's not working for anybody. Like you and people will say, "Well, I know my uncle, my grandma, my so and so, somebody, one person in my life Their retirement turned out pretty nice. Okay. What about the countless people you see greeting you at Walmart when you walk through the door who should be retired, right?
Right. Right.
I mean, all of these people, your parents, if they maybe recently retired, there's a good chance that they're considering going back and getting another job, part time, full time, whatever it may be, because the plan that they had been doing isn't working. And that's that plan that locks up your money and doesn't allow you to be able to grow it, use it, capitalize on it for however long, and then gives you what, 15, 16, whatever years to like, you got to spend it. You need to
Yeah.
spend it or we're going to force you to start doing it. So,
Right. Yeah, you're exactly right about that. We've got to visualize that and teach people that a little bit better, because they'll argue with us when they don't understand something. And hopefully they're arguing with us because they're hungry for the knowledge of the truth. If
okay.
they're not hungry for the knowledge of the truth and they're arguing the merits of what they've always thought, then they're going to not win financially for their own family. So, you are hitting the nail on the head about this. And we saw the truth. And as the good book says, the truth will set you free. So we have the curse of knowledge, people like me and you. And the curse of knowledge is once we saw it, we can't unsee it. I see it now. So I'm like, why would I ever? My brother's more adamant about this than I am, but why would I ever lock my money up in those things? And I'm like, well, there's the possibility of some returns, or maybe if you're at a certain age, I can't tell everybody, let's wipe out your other plans because, you're close to maybe being able to pull it without penalties. We can't always advise that way. And that's why it's always specific. The infinite banking concept is your goals, your plans, your life, your opportunities that are coming to you and all that. But I mean, there's no way that I'm ever going to take the risk on as a young person who knows the difference. Like you said, day one of working my job, I'm never going to take the risk of this, maybe, but inflation, but taxes, but deferral, but
We'll deal
uh,
with when we get down the road. Like we'll
yeah, like I would never take that.
yeah,
Yeah.
we'll
Yeah.
guess at what it's gonna be down the road. And it's
Yeah.
it's so crazy. Like you mentioned earlier, what you're doing is you're putting your trust in the government.
Yeah.
Like, let's look at the track record. Now, again, big fan of America, even though I've lived other places.
Yeah.
I would like America. I would like us to trend back up towards the top of, you know, the uh the national powers. But why in the world would you trust people with your money that literally have the most debt? I mean,
Yeah.
it's not even comparable. Like, so obviously what they're doing with their money, which is really your money, is not working.
Yeah.
So I'm gonna be like, hey, you guys that can't, handle this, just handle my money for me. Make sure that you sort everything out. So when I get to retirement, I'm gonna be like it doesn't work like
Yeah. Well, there's so many things out there that point us toward the direction of doing something outside of the government's typical plan
Mhm.
and live in a gig economy now, right? We grew up, people like you and I'm 40 years old, and I grew up in an environment where baby boomers were my teachers, right? Baby boomers were my parents. And they, as soon as they were done teaching me, when 2008 hit, I was 2 years out of school. I'm 24 years old at that time. I do have a mass communication degree. And everything they taught me in terms of security of the system, white collar, college degree, free internet, that's how it was taught. Everything hit the fan at that time. Everything hit the fan. And these people are good people, ethical people, moral people. They love me. They thought they were doing the best, and the system failed them.
Mhm.
So I can't trust the system. I can trust the people, but now I have to think about what they tell me because are they basing it off a system that only worked during a certain time period? And that system, if it doesn't work for them, if there is no pension, if there's not crazy record market growth all the time, then it's not going to work. I have to play a different game. And if I can play a game that's older than the system that they learned,
Sign me
it's
up.
not like I'm doing yeah, it's the same. I like, hold on. All we gotta do is go back 50 years, 60 years, 75 years before that system worked for most people, most of the time. It's, oh, we'll just go to the root. before you guys created that faulty system with holes in it, we'll just go back to the root. And that root is, let's put our money in a private place that's not controlled by the government, that doesn't have an influx of crazy amounts of fractional lending.
Mhm.
Oh, good. And guarantees for me to be able to get cash all the time. Well, that makes sense. But it's such an antithesis to so much of the world now. They've had a lot of commercials over the course of the last 50 years telling them something else was different. Something else was going to work.
Yeah, it's the government obviously tells you everything, and everything they say is correct and it's truthful. So of course we listen to them. But I think people oftentimes with infinite banking miss one of the biggest points, and I mentioned this in another podcast, but I think the way that Caleb, uh,
Williams?
yes, lays it out as the and asset, because a lot of us call infinite banking this concept a different thing. But at the end of the day, it is the concept of infinite banking. And I think just calling that the and asset, because people often come here and they're like, I'm going to put my money into this thing and it's going to be here. Obviously, you and I know that they're not understanding the concept of infinite banking. But what they're really missing is this is just the place to warehouse that money. Currently, you warehouse it at the conventional bank down the street from your house, Chase, Bank of America, whoever it may be. You leave it there, they take it, and they go make boatloads of money with your money. Cool. If you're fine with that, awesome. Totally fantastic. It's not working out for a ton of people, but keep doing that. All we're talking about is warehousing it in a place elsewhere that you have more control over, where people aren't being able to 2, 3, 5, 10 times lend out your money, the fractional reserve banking that we were just talking about. And that control stays with you. An insurance company that is not allowed to do any of that as far as lending out money that they don't really have on hand. And then you can take your money if you are really into what the government's offering, if you're into the market, if you're into Wall Street, if you're into all that stuff, then you can go over there and you can do that as well, knowing that you've created this safety net on the back end, because if you lose everything, you haven't really lost everything. You still have a little bit working for you on the back end, making you some money. So I think they're missing that. It's like it's not the either or asset, it is the asset.
I love that. We call it the ideal asset. And of course, we love Caleb and I'm friends with him. And we've taken a little bit of what he's done in his and asset viewpoint, his book. He's got a book. Check it out, everybody. And our friends at Factum Financial, who also teach what we teach. And we've hybrid what they say and what he says and kind of put it into the ideal asset. Why is whole life insurance the ideal asset to do infinite banking from, to have it, to own it, to warehouse your wealth there? And so we have 8 different things. I can't think of them all off the top of my head. I'm sure I'd mess it up if I if I tried, but why is whole life insurance that thing? Why is it, we them boys, as they say, why is it that thing? Mama, there goes that man. There's that type of asset. And we help people understand that. And once you see it, once again, you can't unsee it. It does take some time, and that's totally fine. But most people don't realize they've been hoodwinked. They don't realize how much money they've made so far in their life. It doesn't matter if you're 20 years old or you're 80. You don't realize how much money you've made and that you don't have it anymore. How much money has been made off of your money? Who's got that money? Where is it? They don't realize that. And because of that, it's kind of hard to see sometimes the forest through the trees. So we have to break it down for them. If you put your money in a different place, you're still going to have it. And it's crazy. And they'll give you a separate pool to like live off of.
So this all sounds so great. And I don't know how many people that you've talked to that you sit down with, you have this conversation, you lay everything out for them. Because again, all we do is educate people. I'll say this in every one of my podcasts, there is no selling here. I cannot sell you the idea of this concept. You have to get it to want to be involved. And you'll get it sooner or later, or you won't. Either way, we can't sell it to you. But this all sounds great. I'm sure you've heard, this sounds too good to be true. This can't be real. Whatever they may say, whatever version of that they may say. what are some of the, because I, like to play a little devil's advocate here. What are some of the, we can't say risks, but potential negatives of getting involved with infinite banking? Because it can't be perfect, right? Like there's nothing out there that's going to be perfect. It can be close, but what do you feel like people who are going to nitpick at little things and try and find the smallest thing to complain about, what do you think that they may find about the process of infinite banking or utilizing participating whole life to do just that?
I don't have a problem playing devil's advocate. I help people do that all the time to help them think through it. And that is okay. So it depends on where you're coming from. Once again,
Mm.
if you're getting in a fight with someone that you love because you're trying to get to the truth, it's different than getting into a fight because you want to hurt someone. Those are different. Yeah, those are completely different. So first off, it's completely fine to try to nitpick it. But before we go into that, and I play devil's advocate, I need to remind me, you, everyone out there, you're going to have to play it against a guaranteed contract.
Mhm.
Okay. So if it says this in the contract, you can't decide your disposition toward it is more important than a guaranteed contract. It doesn't matter how I feel. You've got a guaranteed contract. So let's say that first, and then let's get into the things that might be devil's advocate worthy. Number one, it's life insurance. You can't be dead. Abraham Lincoln and Martin Luther King can't get it. Okay. So there is a point at which you don't qualify. Insurance is something you have to buy before you need it. Everybody knows that. So there's a point at which you and I will not qualify anymore because of age, because of health, or because of other life circumstances. We are not going to qualify at some point. So if you're already there and that's what you pick apart, you're picking apart the fact that you can't get it. Not that it's not a guaranteed contract, not that it doesn't work. It's just because, oh, you have a condition or your background is sketchy in terms of the insurance company's ability to take on the risk. So that's something that people can play and we can go down that path with them. Reminder to everyone who goes down that path or has to because of their height, their weight, their A1C levels. We might put it on your spouse, your kids. It doesn't have to be you. Okay, another one is what I call the capital crunch. The first couple of years, as we capitalize the policy, what people miss there, because I'm happy to go down that route and help people understand. If you put in $1, it'll buy you 1,000 in terms of death benefit for sure, but you cannot borrow from that 1,000. You cannot borrow a full dollar today. And that's okay, but I have to help people understand that you're building a bank, you're building a business, and your first year of college, freshman year, you paid, you did not earn. And if they grasp that concept, they're okay with it. If we're going to start a business, we're going to have to buy equipment and some tools and get a business license. We're in the hole before we actually make sales.
Dude, I'm going to pause you real quick. I never thought of that analogy like that. I always tie it to, opening a business, blah, 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 because it is a business, but I've never tied it to college. You go to college to get a degree so you can get a good job.
Yeah.
Unless you're on some NIL deal where they're paying you to go to college.
Hey, let's
It
go,
happens,
right?
the average person is paying to go and get that education. You
Yeah.
are going into massive debt, you or your family is, to get this education, to then build yourself out of that hole that you dug, dig yourself out of that hole, so you can then, after 4, 8, 12 years, essentially be in the black, be
There you
earning
go.
money for the rest of your life.
Yeah, so like boom, right? It just
Yeah.
hit you. Yeah. I studied mass communication in school. I have a bachelor's degree, 4-year degree, liberal arts. Freshman year of school, I paid money. I didn't make anything. In this system with infinite banking, set up with the way we do things from whole life policies, you put in some money and there is some that you can use. That's not how it worked freshman year of school. I put in a lot of money and there was nothing to use. I didn't make any money. They had me going to class all day. I didn't make anything, right? So people understand capitalization of a business. They understand capitalization of an education. And for some reason, they bark at me about capitalization of a life insurance policy because they decided that this should be different. And I'm going, you understand capitalization of your 401k? All you're doing is putting in money. You're not using any of it. Money, it's just like saying, well, you know what? I'm rich because between me and my bank account and Taylor Swift and Beyonce's bank account, we're good. It's no good if it's not mine.
Mhm.
If I can spend it's not mine, so it
Spend
doesn't
it,
matter. She's got a
spend it.
billion. I can't spend it. Yeah, it's the money that I've got to be able to use. I don't wear money. I don't eat money. I immediately trade it for things that I need. And that's what money's good for. It does no good to sit in a pile. I cannot spend it if I'm dead. I cannot spend it if it's locked up. It doesn't do me any good. So that's what we're here to talk about. So it's very important. And that right there is tough for people. The third thing is where a lot of people who live who are savvy and they're good in business. And that's where they live. Devil's advocate, the returns aren't high. And I'm like, we weren't talking about returns. We were talking about keeping money that you were losing. If
Returns
you
are a
keep
boner.
the money, yeah, if you keep money that you were losing and then it's liquid leverageable, always going up and income tax free, well, then you can go make all the returns you want. So I'm not talking about returns. Like if you've got good ideas for returns, please tell me. I have more cash value all the time.
Yeah.
Please tell me. I'm in with you. Like I'll do the same deal as you for the same amount of time with the same amount of money. We'll get the same return. I'm talking about just like you said, Shawn, where the money came from. Where did I warehouse the money that I got so I could go do these things? So those things, you work through them with most people at some level. And the other level is the one that I deal with a lot, but I don't love it. And that's the one where it's like, hey, is life insurance real? And I'm like, oh, this is not the right conversation for that. Like, you do some homework somewhere. Those people, I have to like dumb it down, and it's fine, but it's like, ugh, how long are we going to stay here while you own car insurance, while you own fire and phone insurance? How long are we going to talk about whether or not life insurance is like real or if it'll pay out? Or is this life insurance company good? And I'm like, do you know when's the last time you looked at your car insurance paperwork? Why are you asking me that stuff? And you already pay for car insurance and you ain't got no idea how it works. Like, that's a different conversation. Those are, did I say four different things? Those are kind of the four devil's advocate areas that, I deal with and I help people. I'm expecting them in a lot of ways, but yeah.
And whoever it was that, like, started this whole thing behind life insurance and the stigma behind it, I don't know exactly being bad, but just, like, who like you said, nobody's questioning their car insurance, nobody's questioning their home insurance, nobody's questioning their phone insurance, but they're like, "Life insurance? That doesn't really sound that legit." Like,
Sick. Yeah. So the reason for that is, let me play more devil's advocate. Actually, around 1980, the life insurance industry created their own problem. They created their own problem around that when they started to actually produce contracts that were not guaranteed to
Mhm.
pay out for the rest of your life.
Yes.
So that right there in our lifetime, me and you, Shawn, I'm 40 years old. So I came on the scene in 84. And in 1979, 80, when they came out with Universal Life, they started giving themselves a black eye by creating products that were different, that were based on computers, that were based on interest rates, that were based on returns, but increasing premiums and potential of it not working out if you live too long. Meanwhile, people at that time, 1980, my grandparent, they didn't think they were going to live that long. Their parents didn't live that long, but my grandparents are still in the game. And so they're outliving a product that was built by life insurance companies that messed things up. So life insurance companies went into the game at high interest rate environments with a different product that they gave themselves a black eye.
That makes
Those aren't the products we're talking about, but that also has to do with the problem. It's like, y'all shouldn't have created that goofy stuff out there that works differently, but got sold like it was guaranteed. It's not the same.
that makes a lot of sense. Yeah, that's, yeah, you got a little greedy. You're like, "Hey, we're doing good with this guarantee stuff, but we see people out here in the market doing all this stuff, and people love the market. Let's go ahead and
Yeah,
give them something that may have a possibility of reacting like the market might react." Oh,
you got it.
I forgot the market goes down. Shoot.
Yeah, the market. Yeah. What happened at that time for my entire life until 2 years ago? Interest rates dropped. So they'd stop working. And the policy was created on a chassis that it got more expensive all the time. So if you bought universal life insurance at a time when interest rates were 12, 15, 16, and then it just dropped on its gain the whole time, meanwhile, you got older and the price went up, that life insurance companies created that problem. They didn't have to create that mess, and they did. Yeah.
So we're hitting that 50-minute mark here. What do you think that people need to, because again, you and your brother, you guys talk to a lot of people. You have a lot of cash conversations. What do you think people need to hear, or just the general person that's like, I hear a lot of stuff about this. I see people talking about the IUL stuff. I see people talking about whole life, infinite banking. It's intriguing, controlling my wealth. I'm a normal person. I see these premiums of 2,000, 4,000, 10,000 a month, whatever it may be. Kind of seems unrealistic to me, but where do I, as a normal person, fit in to wanting to become my own bank?
People need to know that they have a choice in where their money goes first. And if they choose actively to decide that money that comes to them that they work hard for from their employers, from their vending machines, from their rental properties, those dollars grandma gives you for Christmas, if you choose to store them in a different environment than what you're used to, and we can explain to you the ideal asset and the benefits and the privacy and liquidity and guarantees and all that type of stuff of life insurance, you'd probably real quick second guess where you keep your dollars. That's what we're trying to help people understand. If you keep them here, here's what happens. If you keep your dollars inside a piggy bank, nothing happens. If you keep your dollars inside the bank, you hope nothing happens and the money's just there. If you keep your dollars inside life insurance, it turns into a much bigger pool that you can play with. And that's what we want to help people understand. The save and spend system starts with, if you decide to keep your money in that new place we're going to teach you about, watch what happens over the course of your life, your control, your peace of mind, your retirement, your kids' life, your legacy, your taxes. Watch what happens if you keep your money here. That's what we're trying to help people understand. So step one is get educated, stick around, ask questions. We're not saying the word invest. I have to say that now. It's been 10 minutes. So I have to say it again. We're saying if you keep your money here, we're going to show you what happens, and it'll change your life for multiple generations.
And again, guys, this is not the end all be all. This is not the thing that's going to solve all of your money problems. This is not the, what they call it, like the silver bullet. Like,
Yep.
infinite banking is great, but right on the front of the book, it clearly states becoming your own banker. This is a process that you have to study, that you have to get good at, that you have to continue to do. We cannot be the banker for you. I cannot be. Jeremiah cannot be the banker. Whoever else can't be the banker. We're teaching you to become the banker. So you're going to be in control of your system. If that scares you, then by all means, keep allowing somebody else to control your money. But if you feel like, hey, if I'm in control, I know myself and I can make the right decisions, then I think being your own banker is going to be something that you're really going to enjoy. So got a lot of education out there, a lot of information that people can study up on. I know, again, we lead with education. It's all about making sure that you feel confident and comfortable in the information that you're receiving, that you're absorbing, that you're trying to implement. So let the people know you guys got a library list of things where they can start come and learn from. Take a second, let everyone know where they can find you, and where they can follow you and where they can continue to learn about this concept outside of learning from me.
Yes, you can find us on saveandspendsystem.com. That's where you're going to get into the top of our funnel. We are going to lead you toward a 1-hour video where you can learn this concept and kind of see infinite banking 101. Saveandspendsystem.com. Secondly, I would say generically go to thebankingbros.com. That's me and my brother here at the Cash Compound helping folks understand code cracking cash flow. We are going to teach that around here. We've got a great Facebook page as well. And that Infinite Bankers, that private Facebook group is really what it is a great place to be in the community where you can be safe to ask questions. We do want to have a free, 100% free cash consultation with people. Watch a video and get on our phone, get on the phone with us. Do a little calendar here and do a little one-on-one. We're going to help you understand what's really going on. If you know what's going on, you'll know what to do. So you might as well just ask those questions.
Yep, definitely. All right, man. Well, that is a wrap for today's episode. Appreciate you guys tuning in and learning and hopefully growing with us today. Hopefully, this discussion shed some light on the concept of infinite banking, brought you a little bit more clarity on how it might be able to impact you in your life and your future legacy. If you'd like to check out my full overview of infinite banking, again, head on over to the website or down in the description of this podcast or linked at the end of this video if you're watching on YouTube. Like Jeremiah said, book your free cash consultation because I'm a part of the cash compound. You may be talking to me. If you want to talk to me, if you like the way my voice sounds, let's chat. But yeah, man, I really appreciate you coming on. Really appreciate your time, spreading wisdom with these people. And when I bring Jonah on, if his story is any different, I'm gonna give it to him. So
Hey, well, you go, yeah, the third person you have on your podcast after that is mom, right? So we're going to give you mom's number. You can put her on to see what's really going on. Yeah.
there you go.
Yeah.
All right, y'all. Well, as always, the information is free, but the knowledge is priceless. Catch you next time.